As interest rates continue to grind higher, a new survey finds that 62% of those with mortgages are worried about their renewals. That's up from 53% last year. We're joined by John Shmuel, managing editor at RATESDOTCA. It's great to see you.
Thanks for having me.
And just to clarify, when we say worried about renewals, meaning the costs of having to roll over their mortgage, is that the main thing?
Yeah, absolutely. So it's no surprise. You were just speaking about it earlier on the segment, right? Bond yields are up. The cost of mortgages right now is high. Payments are up. People are stressed out, right? So we did a survey to find out how many are stressed, right? There are a segment of Canadians that bought their home years ago, have a lot of equity built up, have small mortgages, and have lower payments. Yet there are a lot of Canadians who bought their homes during the pandemic when mortgage rates were extremely low and housing prices were extremely high, right? A lot of these were fortunate to get very low interest rates. If they went fixed, fantastic, right? They probably have a couple more years before they have to start to worry. If they went variable, they're already feeling the pain. So we wanted to figure out how many are stressed about the renewal.
Right, because we saw this explosion in recent years of variable rate mortgages, didn't we?
Yeah.
People gambling, essentially.
Yeah, I mean, listen, when you were faced between a 1.4% variable or a 2 to 3% fixed, a lot of people chose variable. And right off the bat, they were saving a lot of money in their monthly costs. Unfortunately, most of those variables are between the 6 and 7% range right now, right? So they're feeling pain. We found that 63% of Canadians are worried about their renewals. Obviously, those with variable are feeling the pain already, but they still need to renew, right? We have a situation where some people with variable rates, with fixed payments, their payments have not gone up, but the percentage that's going towards interest has shot up, right? They're putting no equity in. And when renewal comes up, they're going to have to reset their amortization, and that means their payments are going to go up and they're going to feel pain.
Oh, of course, because some banks have been easing the pain for people, I think almost informally extending the amortization. But the regulator has said we're watching this practice, OSFI.
Absolutely, yeah. We've seen 70, 80, 90-year amortizations. It's unheard of, right? And that is essentially what's saving a lot of people from being able to keep their home, right, and not default on their payments. But that's going to end. Right, the regulator has said that we are watching this. We want to get these mortgages back into line. When renewal comes up, you're going to have to come back down to 25 or 30, whatever your original amortization was, and that's when the pain's going to set in. Right? We saw a recent note saying we could see 30 to 40% increase in payments when that happens.
That's it. So banks, in some cases, are allowing people's amortization to go out to 90 years in extreme cases.
Yes, yeah, we've seen this personally at RATESDOTCA, speaking to mortgage brokerages. So that is where the pain is happening. And so we asked people, do you have a plan, right? Do you have a plan when renewal happens? The good news is just over 50% of people say they do have a plan. And right now, only 3% of people are saying their plan is to sell their house. So that is what the Bank of Canada is watching. That's what everyone's watching, right? Is this renewal crunch going to result in pain and people being forced to sell their homes because they can't afford their payments? Our survey says that a lot of people aren't there yet, but depending on what happens with bond yields, mortgage rates over the next year, we'll see.
That was interesting. I was thinking about this. Well, what's the big deal with renewing a variable rate mortgage? I mean, you know, the rate, you're already paying the higher rate. But as you say, that they may have to change the terms of the loan and your payments will, in fact, go up.
Yeah, absolutely. So banks, we expect, are going to do that. We know that people with variable right now that are on adjustable rates are already feeling the pain, right? So there are a couple of lenders out there. Scotiabank is one that has adjustable rate mortgages. So when the interest rate from the Bank of Canada goes up, immediately the interest rate on your mortgage goes up and you have to pay more in total, right? So those people are not falling behind. They're still putting money into their equity. It's the people that have fixed payments that right now maybe 99% of the payment is going into interest rates.
Wow.
Those ones are building no equity, and they're going to feel a lot of pain when renewal comes.
We had a chart there. Maybe we could put it up again. As you might expect, older people that you surveyed are less concerned. I guess a lot of them have relatively smaller mortgages.
Yeah, obviously, if you've built equity in your home, you have a smaller mortgage, your payments are lower, so that percentage increase hits you less. It's really going to be the young people, right? Our survey found that those 18 to 34, 73% of those people are worried about their mortgage renewal. Those are the ones that have bought during the pandemic. Those are the ones that, if they're in fixed rates right now, they've been sheltered, right? They have those amazing, maybe 1.8, 2% fixed rates that we saw at the end of 2020, early 2021. Those people's payments are going to go up about 50%, right? So can they actually afford the homes they bought at the prices they did? Remains to be seen when a big renewal cliff will hit in 2025, 2026.
I just renewed fixed at 2 years. I thought, I just don't want to gamble. And I don't want to pay those big rates on variable right now.
Yeah, a lot of people are choosing 2-3 year fixed rates. That's very popular. That's a product a lot of people are going with. It ensures that if mortgage rates do come down over the next couple of years, you're not locked into your term for 5 years and you can refinance or renew, at a better rate. But really right now we're looking at a higher for longer environment. That's the way it seems. So we're really going to have to watch what happens over the next couple of years.